In this video, we're going to show you the automatic journal entry export to QuickBooks Online from the PayTaker system whenever a payroll run is performed in PayTaker. The first step, as with all the QuickBooks Online integration, is to ensure your company in PayTaker is integrated with your QuickBooks Online company. If you haven't done that yet, we'll have a video link in the description to a video showing you how to set up that integration. But as we can see on this page here, the QuickBooks Online integration is active for this company. So after that integration is set up, you want to check off this automatic export of journal entries to QBO when payroll is run. Then there's this Edit Journal Entry Export Settings button here. When you click on that, it's going to open up all the settings for your company for how the journal entries are going to be exported to QuickBooks Online. So the wages for each employee are going to be shown here, as well as all the government deductions and any other custom deductions that your company has, such as union dues or health insurance. Now, by default, everything's separated out into the net pay for each employee and all the deductions separately. But if, for example, you want to just have one journal entry for all of that information, you can check off this combine all payments in single journal entry, and then you'll just have one journal entry to configure, and all the amounts will go into that single journal entry. Similarly, if you want all the employee wages in a single journal entry, you can check this one off, and you can do the same thing for the government deductions if you want one entry rather than income tax, CPP, and EI all being separate. You can combine them into one. But we'll just keep it all separate here. And then the other thing to mention is that you can customize the item description, and you can change the debit account and the credit account for the journal entries, or for each journal entry. These accounts here are going to be a list taken from your company in QuickBooks Online. And if you want to create a new account that doesn't exist in your QuickBooks Online company yet, you can select Add New Account and then type the name of the account here. But they've been sent to some sensible defaults by the PayTaker system, so we'll just leave it with all the debits going to the PayTaker payroll expenses and all the credits going to the PayTaker payroll liabilities. If you want to change all of the debit accounts, for example, all at once, you can check out this Use Same Debit Account for all journal entries, and then if you make any changes to this debit account here, say we change it to other portfolio income, then we see that all the other journal entries change like that as well. But again, we'll just leave it to the sensible defaults set up by the PayTaker system. So we click OK. We're happy with all that. So then we click on Save Changes. And now the changes are saved. So now these journal entries are going to be created whenever a payroll run is performed in PayTaker. So let's perform a payroll run. We go to Payroll, Run Payroll, and let's do an unscheduled payment, and we'll pay Brad. Let's pay him on March 1st for the entire month of April. So now let's go ahead and calculate the payment. We see he has 8.002 hours. Let's bump that up to 100 hours, and we have the vacation pay being accrued, so we'll just leave that. So the gross is going to be 2,000. Recalculate the deductions, and all those amounts make sense. So let's go ahead and, well, actually before I do that, let me just show you the company here. There's no expenses so far this year for the company. So let's create the payments. We see now that we've got this payment created here. We can see the pay stub if we want to do that. Now let's refresh the company in QuickBooks Online here. And we'll see that that payroll run is going to show up as an expense for this year. So now we've got that 2131 representing that pay stub that we just created. So it's 2131, which might be a little bit confusing because the gross is just 2,000. But you have to remember that these expenses include the company contributions on EI and CPP as well. So it's the gross in addition to those. And then if we want to see the breakdown of the actual amounts and the actual journal entries that were created, we can go into our chart of accounts, and then we'll look up the PayTaker accounts, and let's check the PayTaker payroll liabilities. And we see here those deductions and the wages for the employee, and they're all showing up in here. And then if we want to see the other journal entries, we can check the payroll expenses, run the report, and we'll see the same amounts in this account as well here.